Hi, this is Joseph. It is Friday, September 6th, 2019, and we're done trading for the week. The market's still open for another hour or so, but we're done trading. We've wrapped things up in the chat room a little while ago, and I want to show you what we did this week as far as our performance. So our total profitability from all of the trades that I called out this week, we were actually closed on Monday because Monday was a bank holiday. It was Labor Day here in the United States. I live in California. I celebrate Labor Day. It's the last holiday of the summer. So with family, of course, I missed and took that day off. I usually don't trade on bank holidays. But so we had 4 trading days this week, and our net total profits was 566 pips. And I want to show you exactly what that looks like and what I mean by that. Now, I know that there are a lot of other signal services out there, and they will claim that they're earning 100 pips or 500 pips or 1,000 pips. And very often you'll find that they're double counting. So if they take, let's say, a trade on the euro dollar and they earn 10 pips from the entry to the final target there, but if they have, let's say, 10 lots and they earn 10 pips, they'll count that as a 100-point gain. And I don't do that. I think that's double counting. I think that's unfair. I don't think that's that transparent. I think that it makes it difficult for somebody to decide if they want to use a service like mine, a trade call service. I know that because in 2001, when I started trading, I would visit websites like this, right? Services that were calling out trades. And they would claim that they were making 300, 400 pips in a day on the euro dollar. And I would be looking at the charts and I would think it didn't even move more than like 30 pips from the high to the low for the entire day. How are they making 300 pips in a day? And what I found out was that they're taking multiple little mini lots and they're scalping, and then they're saying that they're earning that much. Now, granted, they're probably doing that, but we all know how that ends up. Like that's not a really good strategy. And I want you to know that when I call out these trades and I report the gain, it's from the entry to the final target. It doesn't matter how many lots we put on the trade. The other thing I want to share with you before I move on is that not all of my students in the chat room earned 566 pips. The reason is they may not be in one session or the other, or they may have logged out of the chat room for whatever reason. Some of them are at work. Some of them could have been, on the freeway on the way to work, or they could have been sleeping. So they may have missed some of these trades. But I'm in the chat room, both sessions, the London session and the New York session, and I'm calling out trades throughout that entire time. So there's always somebody in the chat room watching me call out these trades, and they're keeping track of them too. So every week I come to this page. This is the home page for my chat room service. Every week at the end of the week I come to this page and I update this total. So as of the first week of September, September 6th, for the entire year, we've earned, and I've called out trades that have resulted in 18,544 pips. That's every winning trade and every losing trade, all of them combined. I don't leave anything out. I don't double count. This is from the entry to the final target. I'll show you exactly what that looks like. So this week we had a total of 566 pips profit with 0 losses. And I'll show you quickly some of those trades and what it looked like. So you might remember at the beginning of the week, the pound dollar turned around. So this was Monday and I wasn't trading on that breakout. There was actually a signal. I would have traded that. That's a continuation breakout trade. It's one of my techniques. You probably watched me talk about it in some of the videos. The first technique that I developed back in 2001 was called the continuation breakout trade, and it pays approximately 55 pips. So it's set up just below that support low, and then it moves 55 pips. Well, later on, we saw price take out the 2,000 level. Now, most of the market was watching the 2,000 level, and I talked about this in the chat room during the London session. This set up initially when it turned around during the London session. So we were able to take this trade, and you can see we took multiple trades along the way back up. This is the pound dollar. I'll show you the pound yen in just a moment. And my thinking behind this turnaround as it went through the 2,000 is, first of all, most of the market's looking at the level 2,000. Secondly, I don't know how many times I've been in this situation since I've been trading in the last 18 years where I have seen critical levels breached on certain currencies, whether it's here in the United States with interest rate policy, when the dollar moves through certain levels, or the pound or the euro, whatever that it is, there is an agenda for the most part with politicians and the banks, the central banks, deciding that a certain level, and you've heard it before, that a certain level could cause some implications. I'll just leave it at that. Certain levels, when they're breached, they could cause certain things and they'll defend those levels. Back when I started trading in 2002, 2000, I started trading in 2001, but I remember in 2002, 3, and 4, I remember a lot of talk about the Bank of Japan defending certain levels, and they would step in. That was my first experience back in 2001 and 2 and 3 with banks, central banks, stepping into defending certain levels. So we immediately saw, as price went through on the pound dollar through the 2000, it sat there for a little bit and then it reversed. And it reversed with such a massive wave of Brexit speculation. It was tweets, comments, this, politician said this and that bank official said that, and it just kept going and going and going for a few hours. And it didn't surprise me at all when it was very, very obvious that somebody then at that point was stepping in to defend that 2000 level after it, of course, cleared through that level. That it crashes through, right? And people talk about triggering stops on the other side of that, and then it reverses, and it reverses sharply. And I think it caught most of the market off guard with how sharp it ended up reversing. So again, stepping in, realizing we're taking short pieces of it, and then after a while it was pretty obvious what was happening here, and we were able to take more of the trade. The pound yen, for the most part, did the same thing. I want to show you the pound yen. I want to show you basically the bulk of the trades that really gave us the opportunity. So again, initially, when price turned around during the London session on the 3rd, this was the 2nd, I was off because of Labor Day. Again, there was another continuation breakout trade there, but I wasn't there to call that trade. Otherwise, I would have, and our profitability would have been even higher. None of these trades failed, but again, initially with this move, I'm going to be a little more careful. So we're taking smaller pieces of this trade, and then I get another breakout here above resistance, and then this opportunity here at 128.42, I had 2 targets. The first target was above the next resistance level, which was back up here at 129.42, and then the final target was there at 130.42. So this resulted in approximately 200 pips. Some of the students in the chat room only took 100 pips, and that's okay, whatever they're comfortable with. As these trades are developing, and as I get into the trade, I call out these trades. I tell everybody I'm going long pound yen. I give them the price levels. I tell them where I'm taking my take profit, the first target, the second target, and then I post all of that on the screen. Excuse me, on the screen so that you can see it. I've been talking since the London Open, and it's been a long day. So again, I apologize. And then I also explain exactly where my stop loss is. And as price is hitting these targets, I again announce it, and I'm showing it on the charts, so you're never left to guess what to do when you're in my chat room. If you're going to follow my trade recommendations and you're going to learn my trading system, it's best that I give you every thought that's going through my head as these trades are developing. I think that's the best way for anybody to learn somebody else's trading strategy. It's just too difficult to learn and go on YouTube and watch a few videos and then think that you have a complete understanding of the strategy if you've never seen it, and then try to execute. It doesn't work. It usually doesn't work. Maybe sometimes you'll get lucky, but usually it's a really hard way to go to try to learn somebody's trading system just from watching a few YouTube videos. The way to learn somebody's trading system is to trade with them every day and to see the different variables and the different types of market conditions and the twists and the things that can change politically and with central bank, the bank interest rate policies, everything that has an impact on what we trade, and to see how I execute with these strategies over and over again. You get to hear my thinking process as I put together these trades and they're developing and why. So as I'm thinking through the analysis of these trades, I'm speaking it all out loud so that you get to learn exactly what's going on in my mind, why I take certain trades, why I stay away from other trades. I'll share with you how I did that today with non-farm payrolls. And you don't have to really be afraid of the trades anymore. I'm there to answer your questions. I'm there to guide you to make sure that if you're going to follow my trade recommendations, first of all, I'm taking the same trades in my own account. And I want you to make money if you're going to follow my trade recommendations. And I think it's so important for you to understand exactly what it is that I'm thinking and doing. So that's the trade. That's what the chat room's like with these trades. And then we got another little break here yesterday with a few more. I have 2 take profit levels on every trade. And generally, in a range like this, I'm going to target, let's say, psychological levels. This was a continuation breakout trade, so it's the reason that I targeted 200. Normally, it's a 250 pip target on the continuation breakout trade, but this was a major, relative to this time frame, resistance area, and I wanted to make sure we locked in profits before that. And of course, it broke out again, gave us another opportunity during the London session yesterday, and we were able to pick up, I think it was 60 pips here, approximately, to that final target of 50. And again, in a tight range like this, where I think it's topping out like that, I'm going to target psychological levels in a trading range like this. So it did eventually, and went a little bit further, but eventually it sort of topped out here and then stopped. I didn't trade the pound yen today. I didn't sell it. I didn't think it was necessary. I thought that the pound dollar and the pound itself was sort of running out of momentum with the busy week that it's had. And you can see here with the pound dollar that the pound dollar, for the most part, went pretty flat and sideways here. So I stopped trading it. The trade that I had today before non-farm payrolls was a London market open trade. This was during the London session. This was on the dollar Swiss. So again, I have two targets. We got in at 78. The first target's the 00. The second target's the 20. This was just before non-farm payrolls, and it went as high as 16. So some people locked in profits there before non-farm payrolls, which I mentioned, but other people decided to go ahead. And so this is how we do it. When I call out a trade, I recommend executing 2 trade orders so that you can scale out at these 2 different levels. It's going to make your trades a lot more profitable. You're going to earn a lot more money. That's the way I trade my system. That's the way I teach it. So what I would recommend, if you're not in my chat room but you're considering joining, let's say, for example, you're used to trading and you're comfortable trading 1 mini lot or 1 standard lot, and that's the maximum you trade whenever you execute a trade. I recommend you cut that standard lot or mini lot in half so that you can put on 2 trades at the same time we get into the trading. You can scale out. So you would close the first lot at the first target, and once it hits the first target, you've banked and locked in that profit. And then you set the stop loss at a break-even stop so that if the second target doesn't get hit and it rolls over, you just close the second lot at 0. You haven't lost anything, but you haven't earned anything. Or, in this situation, just before non-farm payrolls, I recommend taking whatever you can, whatever you get. So this one actually squeezed out a few extra pips profit here above the 00. This candle here closed at 9. So there would have been maybe an extra 9-10 pips on that trade. So the second lot actually goes from 78, our entry, to that second target. And in many cases, like you saw with the pound yen, it hit the second target. So effectively, you're earning more than just the 20 pips, let's say, if it hit the first target and the second target. But I don't double count. If it only hit the first target and it was 20 pips, I'm only going to count at 20 pips. If it hit the second target from the entry of 80, let's say, to 20, let's say if it hit 20. So let's use a more accurate example. This was the 200-point move here on the pound yen. Some students, as I mentioned in the chat room, closed the trade at the first 100 pip target, and they were comfortable with that. That was a big move. That was a big thing for some of them. They've never done that before. So I understand why they would want to close it. And, you know, it took another few more hours. So there's a lot of time involved in trading this. But when I report this trade as my performance from the entry at 128.42 to the final target at 130.42, that's 200 pips. But effectively, for those who traded it with me the way I recommend, which is to have 2 open trades, the first one both of them at the entry, the first one closes at the first target, 129.42, and then we set it at a break-even stop. Well, it didn't come down to the break-even stop. It kept trending all the way up to the second target. So effectively, some people earned 300 pips on this trade. But I won't call it a 300 pip trade. I just call it a 200 pip trade from the entry to the final target. That's not double counting. I just want you to know exactly what we're doing. When you look at my stats, you know that it's from the entry to the final target, but there's more profit in the trade if you execute the way I do. When I developed this trading system, one of the first things that I implemented as I was piecing together each one of these strategies, the continuation breakout trade, the Tech 1 trade, the T2 pattern, the HL30, all of those are my strategies. I developed those strategies starting back in 2001. But the thing that made the biggest difference for me and really changed my profitability was the ability to scale out at 2 different levels on all of my trades. Because it ensured that even if it didn't hit the final target, I was still going to earn some profits. And I say this all the time. we're day traders. We're here trading every day. We put in 8, 9, 10 hours. I think it's really important and it's critical to get paid for the amount of time that you spend trading. We're not swing trading. We're not going to hold on to these trades for 2, 3, 4, 5 days at a time, or even 2 weeks. We want to get paid almost every day. So it's important to find, whether you're using my strategy or not, different levels that you can scale out of a trade to ensure that you're locking in some profits along the way, which is exactly what you see here. But as far as double counting, I want you to know I don't double count. I'll always report from the entry to the final target. So any other trades that I want to talk about? I stayed away from the dollar yen for the most part, but it has given me some signals that I might be able to carry through till next week. There was a couple of trades here on the euro dollar. Again, several of them set up during the London session, and others set up during the New York session. So I have 2 sessions in the chat room, the London and the New York session. So I'm in there approximately 10 to 11 hours every day. That's how much time I spend in the chat room with my members and my students in the chat room, and I call out trades live. And everything that you see me do in these videos, that's exactly what I'm doing. I'm doing chart analysis. I'm explaining how I use the Fibonacci tool, how to measure and analyze price swings, momentum, when price is probably topping out, when price is probably forming a W bottom, all of that. Everything that I do when I apply technical analysis to my charts, I'm teaching and walking through the entire process and thinking and speaking all of this out loud. So you learn my method for using Fibonacci tools, using pivot points, finding support and resistance, gauging momentum. I also show my futures charts in the chat room, and I talk about futures because I do trade futures at the same time. There's a lot of correlation between some of the currency pairs that we trade and the futures market, and I show how to blend all of that together. We also talk about economic data. So today we had non-farm payrolls, and I did not take any trades here. This was right around non-farm payrolls, euro dollar. We were flat before non-farm payrolls, which is a pretty good idea in most cases. But I was saying that I could see that there just wasn't a whole lot of momentum here. So I didn't go long on that bullish Tech 1 trade signal candle. I could see that it was finding some resistance. Actually, I'll show you my chart and what I was looking at. This was the chart when I was in the chat room. So for those of you who are in the chat room or watching this video, I want to show you what we were looking at and remind you that this was the resistance level that I was looking at. So this was the resistance, which is the 1.1051. So in the chat room, everybody's waiting for me to take a trade and to call a trade after non-farm payrolls. But again, with this bullish candle, I could see that it was sort of bouncing off of this support range. This is my overall consolidation range, right? This is what I'm looking at. There was actually a short yesterday that paid approximately 20 to 30 pips here. So back to this, non-farm payrolls and the bounce. Even though it was bouncing, I wasn't 100% confident that it had the momentum to continue. So one of the things that I want to decide every time I get into these trades, and again, I've been trading for 18 years, so I don't just take trades blindly. I do a lot more analysis than most, just because of my experience and the experience of getting into trades where they don't go anywhere and they go sideways, and I'm stuck holding on to these trades for days. I want to know that when I get into a trade, it's more likely to reach its take profit level quickly, meaning that if I'm going to put money into the market, my capital, my money, if I'm going to put it onto a trade, I want to be in that trade and out of the trade as quick as possible. I try to do everything that I can to gauge momentum, market sentiment, everything. I put it all together, volume levels, everything together to determine, is price likely to reach my take profit? Should I waste any time on this particular trade? Meaning that if I get into a trade and it doesn't go to my target, then I get stuck holding onto a trade like this because there's just not enough momentum. And if I can determine that, then I'll pass on the trade. The reason I look at it that way is that, especially now with these market conditions as they are, especially since the middle of July, things have changed quite a bit, right? Market moves really quick, jumpy, 180-degree turnaround just because of a tweet. So we got to be careful. We got to be on protection mode, right? We always have to be prepared for that. But what I'm getting at is, if I'm going to leave my capital in the market and exposed to these different scenarios where the market could turn around or the market's going to go sideways for 2 or 3 days, 24 hours, 12 hours, the longer I stay in the trade, the more susceptible my trade and my money is to these conditions that we've experienced and we've watched, right? The Fed official comes out and makes a statement and it reverses price immediately, and then 5 hours later he says something that retracts everything that he said and it falls the opposite direction. That's a really choppy market environment. I want to avoid that at all costs. So again, when I saw this bullish move, it looks great. And back in 2001, I would have taken that trade and thought, okay, this is great. It's going to go all the way back up here to 83. And it doesn't. And why doesn't it? It's because there's a lack of participation. There's a lack of momentum. Non-farm payrolls just wasn't that big a deal. The market has absorbed the numbers from non-farm payrolls. We've dealt with it, and now we're moving on. There's a lot more to deal with. What's that saying? We've got bigger fish to fry. So we're looking and moving beyond non-farm payrolls. But it is possible that non-farm payrolls could have been a big surprise today to the upside, and it would have created some kind of opportunity, but it didn't. So taking all of that into consideration, noticing volume levels, paying attention to market momentum, and the psychology behind digesting that information. And again, this comes from years and years of experience. I couldn't do this in my first year of trading, looking at non-farm payrolls and then staring at the charts and then looking at volume levels and trying to figure out what was going on. There are certain momentum indicators that I'm using at the same time. All of that fed into the decision to just stay away from this trade. So I had no trade here because it really wasn't going to go anywhere. The other thing that I was able to determine was this resistance level, which was also a support low. So this was right here at 1.1051. I put this in this consolidation range while I was in the chat room explaining why and what I was trying to do. So let me go ahead and tighten up the charts and I'll show you. If we go all the way back here to the Friday when the Fed comments out of Jackson Hole and tariff and everything sort of hit the market at that one time and it bounced and dropped, turned around, we had a range of support in here for most of that week. This is that week, and it basically did nothing until that Friday for the most part. We had a support range that was right around the 50. It wasn't an exact number, but 51 was the actual low on that Friday. So I dropped that support line in here, and then at that point, it was also the middle point of this consolidation range. That's important to me. I want to know where my consolidation ranges are on the 1 hour chart, and I want to know where price spends most of its time. When I put a line right in the middle, which also happened to be that Friday low, you can see how it lined up perfectly. I can tell just quickly, visually, where price is spending most of its time. I couldn't really expect a whole lot. This is just from a technical perspective. This is excluding everything that I talked about, why I didn't think that there was enough momentum anyway. Non-farm payrolls, market digesting that information, lack of participation at that time, volume levels dried up. I could see it. But technically on this chart, I'm also looking at this resistance, and I mentioned in the chat room, if the candles close and hold below this old support level, that means something to me. And it means that it's not all that likely to continue to go to this target anyway. So there's no reason to get into a trade that's just going to jump up a few points and then roll right back down. The last thing I want to do is get stuck into a trade thinking it's going to go to 80 when there's just not enough reason for it to go that high, not enough participation, not enough momentum, not enough volume. Nobody cares. It's Friday. And then holding onto a trade, an open position through the weekend. I don't want to hold an open position through the weekend because then again, I've got my money in the markets susceptible to comments over the weekend. How many times have we seen people and politicians make comments on Sunday and we've seen a gap on the open, whether it's Trump, Boris Johnson. I remember back in 2016, Boris Johnson made a comment about Brexit and it dropped, created a gap. It never filled and it dropped for like 2.5, 3 weeks. So the last thing I want to do again is to have my capital or yours when I call out a trade in the markets for a lengthy period of time where we're more susceptible to these external scenarios where we could have our trade reversed quickly. I don't want to do that. The only time I'm going to be placing these trades is when I can confidently say that we're likely to see these targets. And I put a lot of effort into studying the market in other areas to gauge the momentum and the volume and the overall direction at that point. What are other traders thinking at this moment? And again, that's not an easy skill to learn in just a few months or a few weeks. It takes repetition of trading non-farm payrolls year after year after year. I've been trading for 18 plus years, and I look at every single economic report, London session, Eurozone, United States, Asia. I look at all of them. And this is the way you develop that skill, is to expose yourself to those opportunities and those situations over and over and over again, and you gain that ability to understand what other traders are doing and to also be able to determine the momentum, whether or not you should be taking some of these trades. So I want you to know by explaining all of that, it's not to say that I'm the ultimate trader. I'm certainly not. I'm always learning something new. After 18 plus years, I'm always learning something new. I think that it would be foolish for any trader to say, or I see some of these gurus saying that they've seen it all. I would never say that. The next market crisis is not going to be like the last one. The market may react to it. Traders may react to it in a similar way, and I'm going to count on that because the behavior is always the same. But the differences as to why it developed, what it's doing, all of that, it's always going to be a new learning opportunity. So I'm just sharing all of this with you to let you know that you're trading with an experienced trader who has 18 plus years of trading. This is all I do. I do it every day. I even trade on the weekends. I know that sounds weird, but what I mean by that is I can't help it. Saturday mornings, I wake up, I go into my office, I turn on my charts, and I've got to start looking at the charts again. So I go back over certain trades, and I just role play over and over and over again, even on a Sunday. Sunday, I make my update videos, and I'm analyzing the charts anyway, so I'm trading basically 7 days a week. So you're trading with an experienced trader. I'm going to protect you when you're in my chat room. If you've got questions about trades, even if it's not my system, I'll share to the best of my knowledge what I would recommend. But when you're trading and you're following my trade recommendations, I'm going to guide you, virtually holding your hand to each one of these trades that take profit levels, showing you where the stop losses are. I never use a stop loss larger than 55 pips. However, a lot of the trades that I had this week had stop losses about 27 or 20 pips or even 32 pips. And that was the largest that we had for the most part. So again, I'm going to protect you. I'm going to guide you through each one of these trades in the chat room. You can trade with me during the London and New York trading sessions, both of them. Again, our total profitability for the week was 566 pips, no losses, and we're going to do it again next week. And this was 566 pips this week when I didn't trade on Monday. We probably would have had maybe another 150 pips available if I would have been trading on Monday, because we had these continuation breakout trades on the pound dollar and the pound yen right on Monday, which again was a holiday, so I wasn't trading it and I wasn't calling out trades. But the technique and the strategy is certainly there, and I would have called that trade out. So again, join the chat room. I'm teaching my trading system. I'll teach you exactly how to do this. Eventually, I've got students in the chat room that have been there for a couple of years, and they're able to do this on their own. They still come into the chat room to hear my thoughts, but they're able to do these and execute these techniques on their own. You also get access to my online trading course so that you can, on your own time, study those different strategies. There's a total of 13 different modules with, I probably have over 100 videos in there, and worksheets, checklists, manuals that you can download, their PDF. Everything's in there. Everything's in the online course, and you get access to that when you join the chat room. So join the chat room. Again, go back to my website page here. This is the homepage for the chat room, and just check everything out. You can see some of these videos. This was a while back. We earned 920 pips in 1 week. I can't do that every week. The last week we only had 117 pips. So you can see the differences. I want you to know that it's always going to vary. It's always going to change. And then we have weeks like this where we can earn 500, 600, or 700 pips. It all depends on the market activity. It's all based on the market activity. This was back in 2005. This was my personal trading account. I earned $40,755.08 on 3 trades. And it was these trades here were actually this continuation breakout trade. Sorry, I just want to show you quickly because I want you to see it and I want you to learn it and I want you to learn how to do it. This was the continuation breakout trade. So this pays 200 to 250 pips when I take that trade. So again, this was my performance statement back in 2005. 2005, April 12th. This was actually a particular day when I decided to start teaching. And at that point, it led me on the, in the path of opening up my first chat room in 2007. But my first coaching student was back in 2005, and then by 2007 I had my chat room, and it's the same chat room that I operate today. The same hours, same thing, same strategy. I've been doing it since 2007. So again, check out this the results here. This is just an average typical day. This was a while back. This was 1 week. Obviously, we can earn a lot more than 400 pips in 1 week. But it varies. Again, it all varies. So if you have any questions about anything that you see here before you decide to jump into the chat room, here's some more performance videos. I'll be dropping in another one for this week. If you have any questions, though, if you scroll down here to the very, very bottom and you want to talk to me one-on-one before you decide to join the chat room, you can click this button right here, and it'll take you to my calendar where you can schedule a Skype call with me. That sends an email to me once you can select the date and the time that's comfortable for you. It'll send me an email, and then I'll respond to you. You'll get confirmation, and then we can get on Skype and I can answer any questions that you have about my chat room to make sure that you're comfortable before you decide to jump in. Because again, it is a monthly subscription. Right now, though, if you're ready to jump in, you can click on any one of these buttons and it'll take you to the checkout page, and you'll have immediate access and you'll start trading with me right on Monday. Right away. You'll have access to the online trading course and the chat room. I look forward to trading with you. Again, if you have any questions, scroll all the way down to the bottom and schedule a time to talk to me. Thank you for watching.